these stocks are down a lot. Facebook's down over 35%, Google down 15%. They're both trading below their 250-day averages. Hedge fund short interest is elevated in the FANG names. Sentiment is weak. The hedge funds we talk to, they want to short it. They're short Facebook, mostly all of them. So anecdotally and quantifiably, it's either an opportunity or an indication that Wall Street is about to kind of start to leave these stocks.
So what do we do with that information?
I think for Facebook, this is a stock that's been hazardous to your health as an analyst or investor, keeping you up at night. We took our target price down going into the quarter. I think I'd be a lot more concerned if the advertisers that we talk to were pulling back. We're not hearing that. We're hearing they're still seeing ROI. They're enthusiastic about new formats like Instagram stories. I think the biggest concern that I personally have is on an earnings cut on the quarter. So the, rising expenses, which we could talk about, but basically I think there are a lot of investors that don't want to own the stock ahead of potentially earnings for next year going from low 8s to mid 7s.
And that's the thing, Brent, with a lot of these headline type situations, like with Facebook, a lot of negative headlines, but fundamentally it's hard to see what, if anything, has gone sideways with the company. I mean, does this represent the opportunity that a lot of people might have been looking for? I missed it on its way up. I mean, now it's pretty cheap.
Yeah, I mean, it's close to 10 times. I think every analyst has cut numbers, as Anthony said. I think it's been troubling for investors' portfolios short-term and for us as a community as analysts short-term. But long-term, we still see a lot of value. I think we've consistently gone back over the last 10 years and looked at case studies with Adobe, VMware, great franchises that go through the sell-off and ultimately become great long-term opportunities. So short-term, there's a lot of social fatigue and social cleanup across Twitter, Facebook, number of the names in the group. So we think, again, the short term's not very clear. There's more pressure, but long term, as Anthony pointed out, everyone that talks to the advertiser community wants to spend 80% of their money on Facebook because the ROI is so strong. But they idle themselves back to spend 50% on Facebook because they don't want to be held captive. So we just don't hear it from any of the advertisers that are pulling back materially based on what's happened recently. Clearly, there needs to be some cleanup. But again, yeah, short term, all the social names have the same overhang going into the third quarter earnings print.
I want to dig into this a little bit more, Anthony, because I know you just mentioned maybe some price cuts, but I'm still looking, for example, at your coverage universe. Facebook outperform, Amazon outperform, Alphabet outperform, Netflix in line. At what point do you start to think about maybe becoming more neutral or even potentially selling out of these stocks, especially if we're seeing the beginning of a much bigger rotation?
Yeah, I mean, look, I think these stocks are so good at what they do, they dominate, and that's a hard thing to say because that invokes kind of the attention of regulators that perk their ears up. So kind of the outgrowth of the domination of their respective categories, whether it be search or social or e-commerce, is, are they getting too powerful? And so what are they doing in response to that? They're spending like Facebook is to improve the health and the safety and security of the platform. And that's cutting into, in some cases, earnings, not so much for Amazon. What I would say is that as they spend, they continue to grow their competitive moats. And for that, we as analysts over the longer term should pay a higher multiple, as long as there isn't legislation to regulate them. We don't see regulation coming in terms of legislation. We think the drumbeat of headlines will continue to be an overhang. But over time, these companies are dominant. They're not anti-consumer, which is critical when you look at it through the eyes of the FTC. Right. And we think they're building competitive moats for a long time.